Everyone, welcome to another video. Um, Here we are going to talk about order flow analysis. Order flow analysis is something which is picking up of late. People who are traditionally used to using technical indicators are also using order flow for confirmation purposes. Order flow by itself cannot be used as or shouldn't be used as a indicator for trading. What you can probably do is, if let's say that you're already using certain methods to do your trades, let's say probably you'll be using moving average, crossover, or you're using support and resistance levels, or you're using trend lines for trading. You can enhance your winning probability by looking at the order flow as well. So order flow will act as a confirmation for your signals which you would have generated based on your own methods. So I will probably explain the basics of the order flow and how you can use it. Of course, there is no specific method or technique. As I said, you'll have to combine it with your own trading techniques for a confirmation. This is in a way very helpful because often we see that when there is a breakout or a breakdown of a stock beyond trend lines or beyond support and resistance levels, we have the tendency to jump into trades thinking that it's a breakout, only to realize later on that it retraces back and hits your stop loss, right? So to avoid such situations, order flow analysis can help you to overall increase the winning ratio. So that's the whole purpose of order flow. It actually gives a view of what's really happening within the market. Okay, so now order flow charts are not available with majority of the brokers in India currently. So you'll have to probably purchase a paid license. For example, there are multiple vendors in India who provide this kind of charts. I'm using a Quantover for my own purposes. There are other vendors such as VTrender. There is something called as Go Charting as well. So you can choose depending on which, depending on the pricing, feasibility, etc. So looking at that, you can probably make a choice. So here for my purposes, I'm using Quantover. So now what you see here is actually a regular chart, without with the order flow information available here in the chart. So when I say regular charts, all these candles that you see are the regular candles. Here I have taken Bank Nifty as an example here. So as you can see that in order flow chart as well, you will be able to see certain candles, right? So I think the data is loading, so it's going to take some time. Let me wait for the data to be fully loaded. Okay, so kind of data is loaded now. So now this is how a typical order flow chart looks like, right? So now what are the components of order flow? So generally when you look at the market depth, right, any broker terminals, you open market depth, you tend to see this kind of numbers. Left hand side typically in a market depth denotes by limit buy orders which are yet to be executed, and on the right hand side you will typically see limit sell orders which are yet to be executed. Now what is the difference compared to a market depth here? So basically in an order flow chart, all these numbers that you see here are executed orders, which means these are all not waiting for execution, unlike a market depth information where it's all limit orders lying to be executed. Here what you see is typically the orders which are executed. So generally when you look at the market, you can classify two types of traders or investors, right? So one is passive traders, so who are actually bound by certain levels. For example, they tend to put limit orders and wait for the level for execution. And the second is aggressive traders who are actually going to buy at the market price irrespective of whatever is the price of the underlying, right? So generally when you look at it, a limit order will not move the market price of any instrument, right? The price movements happens primarily due to market orders. So hence we call those traders who deal with market orders as aggressive traders. So now what you see here in a market profile chart is primarily those kind of aggressive orders or trades that have been executed. So this is quite useful because generally when you look at market depth, as I said, it's all unexecuted orders. So sometimes to create a false narrative or a false inferences, people can place huge limit orders in an at prices which are like quite away from the current market price, just to give an impression that there are quite a bit of buyers and the stock might move up, right? So but with market orders, this is like executed trades or orders that you see here. So these numbers are actually something which has already been executed in the market, right? Which means if let's say someone has bought or sold a huge chunk of an instrument, obviously the stakes are very high because they're all executed orders. Now how to interpret a market profile order flow chart? So on the left hand side, what you see is primarily the sell orders, right? So what you see here on the left hand side is all sell orders. Now what are these segments that you see? Basically, now if you look at this particular candle, right, the low of this candle was 47,762 and the high of this candle was 47,874. So it's basically around 110 points of movement in bank nifty, so on a 15-minute chart, right? So now what these numbers denote is at each price level within this candle, right, how many aggressive buyers and how many aggressive sellers and how many aggressive buyers were there at these particular levels. So now the segmentation of this is decided by what is known as a step size, right? So the step size can be different for each instrument. So here for bank nifty, currently I have configured the step size to be around 200 ticks, which is basically 10 points or 10 rupees, which means each of these segment represents a chunk of 10 points or 10 rupees, right? So what this shows is basically at the high, which means bank nifty made a high of 874 on this particular candle. So between 864 and 874 there were 94 market sell orders for bank nifty futures. Likewise, all on the left hand side what you see is market sell orders. What you see on the right hand side is market buy orders. Now what's the significance of these numbers, right? For example, you can see some of those numbers are highlighted in yellow color, right? So what it means is some kind of imbalance has been created between the buyer and the seller. So when you look at market order profiles chart or order flow analysis, you should diagonally compare the buy and sell orders, right? So as I said, left hand side is sell. So now if you look at this quantity, it is 299 and on the buy side it has been 93. Since it is more than, I have set the configuration threshold as 3 times, so anytime the gap between buy and sell is more than 3 times, it is getting highlighted in yellow, which means potentially there were more aggressive sellers on this particular candle compared to the buyers. Because if you see the large orders or the large market orders here, I have 260 here, 219 here, 317 here, while on the aggressive buy side it's only 122, 145, 79, etc. So if you look at it overall, quite a bit of sell orders have come in, which is basically market sell, which means a lot of aggressive sellers were active at on this particular candle. So this is how you interpret order flow chart and in a particular candle. So now the step size is up to you. Generally people enter their own calculation on the step size. As I said, for bank nifty in this particular chart we have kept the step size to be of 10 points, right? So this is how you interpret the order flow chart. So now how do we trade? So what you see on the bottom is also something which can be used in conjunction with the order flow analysis. So this is called as time statistics. It's nothing but the delta, right? So what is delta? Basically delta is the overall difference between the buy and the sell, that has happened since the beginning of the day, right? So this is represented in delta. So what it means is, on the top first you see is delta. So delta of negative indicates that sellers were more aggressive than buyers. Yes, I mean, logically speaking, there cannot be a trade without a buyer, right? I mean, so what we are looking at here is primarily the aggressive sellers versus aggressive buyers, which means we had more aggressive sellers on this particular candle compared to more aggressive buyers, right? So now this is the delta. So it clearly shows that sellers are more active on this particular candle. So the next one, what you see is the max delta. What it indicates is when this candle was getting formed. So this is a 15-minute candle, right? So when the candle was getting formed, at any point in time, what was the maximum delta, right, between the buyers and the sellers? So it was 54, which means at one point in time during this candle formation, buyers were more aggressive than sellers, right? So the next one, what you see is the min delta, right? So min delta indicates what was the minimum delta on this particular candle. So as you can see, min delta has been minus 567, which means again indicating that quite a few aggressive sellers were active on this particular candle, right? So the last at the bottom, what you see is the cumulative delta, which basically means that since the beginning of the day, of course, you can set it for a week, etc. But for practical purposes, generally people tend to use delta from the beginning of the day. So that means from the beginning of the day, since the day has started till 12:15, this candle is at 12:15 in the afternoon. So 6,486 is the cumulative positive delta that we have on the overall market orders, which means there has been quite a bit of buying that has happened on the Bank Nifty with aggressive buyers, right? So again, aggressive buyers, when we refer to that, it's primarily the market orders. So now someone might say that, okay, it looks very bullish here, because the delta is positive, but market has kind of gone down, right? So that's why I'm saying that order flow analysis cannot be used by itself. It has to be used in conjunction. So now we will see how probably someone would have taken a winning trade in case of Bank Nifty. So if I look at this chart, right? So what you see on the red line, what you see in the red line is, I'm sorry, it's the 10th on the 10th, right? So what you see on the red line is basically EMF 50, right? And the blue line is EMF 20. Now let us say that I am a trader who trade based on these EMA as a reference, and then I tend to buy when the EMA crossover happens, and I tend to sell when, let's say, the resistance is hit. Now as you can see here, Bank Nifty exactly kind of hit this EMA 50, and then it kind of retraced. For example, it came down all the way from, let's say, the high here was 48,090, right? From 48,090 it came down all the way to 47,470, right? So it is basically a good I would say 300 points on Bank Nifty, right? So now let us say that I'm a trader who generally trades based on these EMA lines as a reference, right? So now, of course, it kind of crossed above this, but then eventually closed below this. Now someone could have taken a calculated guess that it is hitting the EMA 50, so potentially it can reverse from here, right? Now interestingly, here on this candle, if you look at this, I clearly told you guys that what you see on the right hand side is buy orders. So there are quite a few of aggressive buyers on this candle, right? In spite of that, it formed a huge upper wick, and eventually it closed below the Though it crossed EMA of 50 once, it eventually closed below the EMA of 50. So what it indicates is, in spite of the strong push by aggressive buyers, this was not sustained. I mean, it couldn't just cross. Probably if it had crossed and closed above EMA 50 with this, data, one would have thought that it's a buy signal, with the EMA crossing of EMA 50, right? So now this is one indication that, in spite of the huge buying, market buying or aggressive buyers being active here on this candle, it formed a huge, wick. If you look at the wick size, it's like 48,993, and it eventually closed at, so this wick itself is of 80 points on a 15-minute chart, right? So now this is one indication that probably this resistance will hold and bank nifty might reverse from this level. Now the second indication that we have is, I was telling you guys that this is the max delta, right? And this is the delta it eventually closed with. If you see here, the difference between the delta and the max delta is close to 500, right? Which means at one point in time, the buyers were very, very aggressive, and the overall delta touched positive of 44,500, right? But eventually there was a retracement, and almost 500 lots were sold off during this candle, right? So now, while the overall cumulative delta is quite positive, while we have many aggressive buyers in this candle, the fact that it formed a huge wick in spite of having these aggressive buyers, and the fact that there is a huge difference between the overall max delta and the closing delta, it is an indication that this price might retrace back from this level. And sometimes this indication is also given by the previous candle. Now if you look at the previous candle as well, right, where it had crossed the EMF 20, on the right hand side you can again see that quite a bit of aggressive buyers were there, and here candle almost closed at the top, right? But then what is interesting to note below is the max delta and the delta, right, was also similarly and in the same range. And if you see the previous candle again, the max delta and min delta, the delta, right, again there was a lot of pushback that happened during the previous candle. So now this is a kind of indication that there is some kind of selling that is happening when it is approaching the let's say the resistance, or any of the EMA lines, right? So people can take a calculated guess here and then short the bank nifty, and you have close to 300 odd points which you would have got if you had done this short trade, right? So this is the usefulness of order flow analysis. So basically, as I said, by itself it cannot be used as an indicator. You can see in this example I have used EMF 50 as as my point of decision. Yeah, people can use their own techniques along with the order flow, which can probably improve your probability of winning trades, right? So that's the whole point of order flow. There are many other aspects as well of order flow. Probably I will explain those in the next video. So just to keep things simple, this particular video was made to cover very basics of order flow and how one can actually use them for trading, right? Hope it was quite useful for all of you. I believe, of course, as I always say, that before you jump into some real trades, you can definitely go for some paper trades, observe it for a while, and then when you build that confidence and then you have your method is actually back tested well, then you should probably jump into the real trades. So good luck. With that, we conclude on this video. Please, if you like this video, please do not forget to like the video and also share the channel with your known circles. Thank you and goodbye.